The Bank of England has decided to keep the base rate of interest at 5.5%. Many had called for a cut following a slowdown in consumer spending. Let's get some reaction. Joining us from the newsroom is Henry Pryor from PrimeMove.com. Henry, are you surprised by the decision?
Well, I think that homeowners are going to be very disappointed at today's decision, but actually when we see the minutes of today's meeting published later in the month, we are bound to see that there's been some considerable argy-bargy about coming out with a decision to put it on hold. Having said that, I don't think that anybody really seriously thought that 2 months on the trot the bank were going to be reducing rates by that amount. It would send out completely the wrong message. And
can you tell us what effect it will actually have on mortgage holders and first-time buyers?
Well, our big problem is, as we saw yesterday, the government took the mortgage industry to task for not passing on the previous rate cuts that came at the end of 2007. Mortgage lenders, the general public, homeowners are going to be waiting to see whether those reductions are actually passed on to the consumer. In the meantime, the fact that the MPC have decided not to reduce rates this time means that pressure will build, obviously, for their next meeting in February.
And what do you think will happen in that next meeting? Because there has been rumours that there will be cuts next month.
I think we can expect that on the back of yesterday's retail confusions, where we saw the stock market overall reacting very negatively to the Christmas and New Year sales. You have to remember we've got most consumers now having to pay their credit card bills for the Christmas and New Year sales. We already know that most consumers will be staring at significant price rises for energy through the rest of this year. So I suspect that the MPC will take pity on the homeowner at the next February meeting, and we should see a rate cut at that time.